All right, let's dive in here. We're going to talk about how the 2025 law will impact giving and the year-end steps to take right now. Of course, a couple of housekeeping notes. We will send the recording of the slides after the fact. Someone's going to ask, please help me out. This event is approved for 1.0 CFRE credits. Those are professional certification credits. If you don't have them and you want them, you can go to CFRE and check out more. At the end of the session, we are going to drop a survey in the chat. Please do so to confirm your attendance, and also it's just helpful to us to do that. So if you feel like this is valuable, we would love in advance for you to fill out that 60-second survey. By the way, at the end of the session, I'm going to tell you, I just spent a lot of time yesterday on a super cool new resource for all of you. So that is also how we will send that resource to you. So please fill that out. We'll talk more about that in a moment. You can just hang out in suspense for a moment. Okay. Oh, by the way, one thing you're going to notice for some of you that have been to more than one webinar, which is some of you, we have a whole new design scheme today. So let us know what you think of it. We have redone freewill.com to make it more modern and fresh. You can go check out freewill.com at some point. It looks gorgeous. So shout out to our design team for spearheading that. But today's presentation will look and feel a little different. So please give us any feedback that you have. We're talk about some intros. We're going to talk about the new tax law. We're going to talk about what it means for fundraising. We'll talk about how to actually incorporate that into your end of year giving and into 2026. So this will be a really interesting session. We hope that you learn a lot. Quick intros. My name is Patrick. Actually, 5 minutes ago, I was sitting next to my dear friend, Jenny. Wish she could have come and said hello. This is what I look like with a lot more facial hair, but we are lucky to be the co-founders and co-CEOs of FreeWill. FreeWill is the biggest estate planning and plan giving solution in the world, trusted by more than 2,300 nonprofits, ranging from the American Diabetes Association to the United Way, to small churches, synagogues, mosques, to local animal shelters, to elite colleges, museums, hospitals, food shelters or food banks, homeless shelters, museums, everything in between. So we would love to get to hang out with you at some point if you'd like that. And we've been featured in things like the Wall Street Journal, AARP, the New York Times, et cetera, et cetera. Combined, we've crossed the $13 billion mark in terms of money raised for charity. We're very proud of that. And we're really just grateful for our whole team. Okay, before we get started, one more thing. We're always so grateful. We're so grateful you're here. It moves us to no end. And one of the things we like to do, especially as we get into end of year holiday cozy time, is give away some of my very favorite books. One of my favorite, very, very favorite books, which is also Michelle, Anna's, Meredith, Annie, other folks, Leah, a bunch of people have read this, a book called The Midnight Library. I love The Midnight Library. Why? It's a great book by Matt Haig. Two, it's a really great book about life. The sort of short version of it is sort of talks about different paths that someone could take. So some of you have read this, and how do you get this book? Fill out the survey, and we'll give it to 20 people as a gift. How's your week going? Hey, some good news here. So generally, a little bit less good than last week, but overall feeling really good, which is great. Great to see that. Very exciting. More importantly, right, as we think about hitting goals, what's happening here? We are doing pretty well. We're pretty bullish. So one of our top 2 weeks of the entire year. So great to see the end of year giving is happening, and people are starting to get pretty excited about it. So we're very grateful for you as well. As Phoebe mentioned in the chat, in terms of the book, we will get to that at the end of the session. All right. Let's talk about what the heck is happening in the broader economy. The economy really matters for giving. Really matters for giving. And yes, shutdown is happening, but also there's some really interesting stuff in the market. So the S&P 500 continues to reach record highs. It is up more than 16% year over year, which basically means in the last 365 days, it is up 94% over the previous 5 years. When we talk about the S&P, it is a collection of 500 companies that represents about 80% of the total US stock market's value. Really interesting. And for charitable giving, historically, a strong market creates an ideal scenario at the end of year when donors are increasingly choosing to make asset-based gifts and generally feel wealthier, right? So the stock market end of year plays an enormous role in how good end of year giving will be. Just to see what that looks like in charts, 94.15% since last year. And what you can see is over the last 5 years, since inception of S&P, since 1990, you can see how dramatic the improvement here is. Why does this matter? Because many of your donors have been holding assets since the 70s, 80s, 90s, and 2000s. And so you can see how much larger this is, right? It doesn't always go up in any short period, but over the long term, you tend to see pretty significant growth here. And this is really, really shaping how people think about giving and the opportunities to give. So look, we know the market is up considerably, right? On top of things like stock, the cryptocurrency market is about 3.5 trillion, up from 2.3 trillion last year. That's a lot of money. Bitcoin is the most widely held, up 12% year to date. And most crypto investors have seen strong gains and may now be seeking tax smart ways to give. One of my sort of side fun facts or side theories is that we actually don't hear that much about cryptocurrency anymore in sort of the mainstream news. And my belief is that that's not because crypto has become any less important. What is actually happening is that all of the crypto reporters got reassigned to do AI, which is a more interesting story. So all of the AI stories would have been crypto stories 3 or 4 years ago. But what else is happening, right? It's not all good news in the economy. Prices are also up, right? We recently saw inflation hit 3%, which is the highest level of this calendar year, driven in part by ongoing trade policy, in particular trade policy with China, which is one of the main producers of US consumed goods. The government shutdown and rising prices are straining small dollar donors' capacity to give. And in many cases, the demand for the services that you all provide as nonprofits and operating costs, those are going up as well, right? So your cash is not going as far. And in many cases, if you're a food bank, for instance, your demand for your services may be going up. So this is really, really important. This makes some of these non-cash gifts, which are tracking with investments as opposed to inflation, even more critical to nonprofits this time. So what are we here to talk about? We're going to talk about the tax law that passed in July, what it means for end of year giving, and then what it means for 2026 giving. So stick with me there. Feel free to write questions in the chat. We will try to get some of them at the end, but also potentially some of your peers can answer some of those questions. So what is happening here, right? We passed this bill on July 4th of 2025. Its legal, technical, actual name is One Big Beautiful Bill, signed by President Trump then. It is the first meaningful piece of tax legislation since the Tax Cuts and Jobs Act, what we call the TCJA, in 2017. The OBBB introduces several new provisions that go into effect in 2026. It also extends some provisions of the TCJA, which were set to expire. Now, there are some very strong similarities between the TCJA and the OBBB. Now, why is that? Because both were passed by Republican Senate, Republican House, and President Trump. What's carried over? So the new law permanently extends the ability to deduct up to 60% of AGI for cash contributions to 501c3 charities. The standard deduction, which was raised by the TCJA, and we're going to talk more about deductions, but understanding standard versus non-standard deductions is incredibly important. So if you are bored out of your mind by tax policy, just stick with me for 3 slides. It further increases it by 1,000 for single filers and 2,000 for married couples filing jointly. This brings the standard deduction to $15,750 or $31,500 for joint filers, with future amounts indexed to inflation, which means the standard deduction is going to go up year after year after year after year. Under the new tax law, the current income tax brackets have been made permanent. So effective in 2025, income tax brackets are, drum roll please, 10%, 12%, 22%, 24%, 32%, 35%, and 37%. There's also, by the way, a 0% tax bracket if you fall below the standard deduction, right? But that's what we're doing here. So high-level takeaways from OBBB. Big takeaways. Giving just got a bit easier for small donors and a bit more complex for major donors. Now, this is challenging because historically, over the last 5-10 years, major donors have really carried the day. So we're going to dive into what that means. We're also going to talk about what it means for these very small gifts and how those got easier from a tax perspective. Some provisions apply now for 2025 tax year, while others begin January 1st. Most of what we're going to talk about applies starting January 1st. The big takeaway here is that itemizers may want to accelerate giving before end of year to maximize tax benefits, right? Maximize tax benefits. Donor education, which is part of your job and part of my job is to help you do your job, will be essential in the new year to help supporters give smarter under the new bill. So what the heck is happening here? First, new minimum for charitable deductions. Starting in 2026, itemizers will face what we call a floor on charitable deductions, meaning the first 0.5% of an adjusted gross income from a donor, AGI, will not be deductible. What the heck is AGI? It's basically how much income do I have with a couple of adjustments, right? Hence the adjusted. We'll talk about what the adjustments are, but generally you can think of it as like, how much money do we make minus a little bit for some deductions. But what that means here is that for a donor who's making $200,000 as an AGI, the first $1,000 in charitable giving will qualify for no tax benefit. That's very different than last year, right? So the first 1,000, no tax benefit. Only giving above that amount will count towards a deduction and will start to get a tax benefit. What this means for end of year, donors who might be around that 0.5%, they may pull forward some of their gifts in 2025. Why? In 2025, there's no floor. So if I make $200,000 and I get $500, I get a full tax benefit for that in 2025, but I won't get that tax benefit in 2026. So you might see some pull, right? If I make $1 million, which would be great, I don't. What is 0.5% of $1 million? I think it's $5,000. Someone can check my math there. So only after the $5,000, then do I get a tax benefit. But if I'm only going to give $5,000 a year, maybe I'll give $10,000 this year and no dollars next year, right? This is if they give above the standard deduction. Great question, Ashley Alice. Thank you for clarifying that. This is especially true for small dollar donors, again, who might not surpass that 0.5% threshold. Now, insight two is this higher standard deduction. Remember, we're talking standard versus itemization. We'll dig more into that in a second. The doubled standard deduction from the TCJA is permanently extended. It's going on forever. The standard deduction, right, $15,750 up from $15,000, $31,500 up from $30,000. As in 2018, this will push more taxpayers into non-itemizer status, and fewer households will meet the threshold, right? So remember, in 2017, the last year before any of this was true, roughly 30% of Americans itemized their tax deductions. Then we went to 2018 and 2022, dropped down to about 10%. Big shift here. Rick asks whether we'll have some scripting for clarifying this to donors. Yes, we'll talk about that later in the session. So thank you, Rick and Danny, for that question. So 30 went from 30%, right, all the way down to 10%. And so this is a huge shift, and it really fundamentally changed giving as we looked at 17 to 18. With fewer donors itemizing, many charitable donations no longer provide a tax benefit starting in 2026. And for many people, it really changed in 2018. 2025 may be the last year that some households can claim a deduction for their charitable giving. What this means is for end of year, donors are often going to maximize giving by bunching gifts this year to exceed the itemization threshold, right? This is for your itemizing donors. Now, we've talked a lot about itemizing versus standard deduction. What does that mean? What is this language? Some of you feel like you know it already. Some of you might be a little confused by all this tax jargon. We're so sorry for all the tax jargon. Here's what it means. How itemizing works. Instead of a preset deduction, which is the standard deduction, you list specific deductible expenses, such as mortgage interest gets me up to here. State and local taxes get me up to here. Medical expenses over 7.5% of my AGI. Suddenly, charitable donations, right? That's the really important part. Standard deductions here, only once I get over it, do I say I become an itemizer instead of just taking the standard deduction. Because let's say mortgage interest plus taxes get me here, well, then it's better for me to just take the standard deduction, right? So that's how itemizing versus standard deductions takes. It doesn't mean that people who take the standard deduction don't do any of these other things. It just means that they don't add up in their entirety to above the standard deduction, right? That's the really important point here. So your total itemized deductions may exceed the standard deduction, which can mean that you are now in the special itemizer camp. So that's why we're talking about this. How the standard deduction works, it basically says it automatically reduces your taxable income by a fixed amount set by the IRS each year. If you take the deduction, you don't have to collect and submit records of deductible expenses, but you can still lower your tax bill, right? So you don't have to do this. As an example, a married couple under 65 with $131,000 and 500 AGI, taking the standard deduction, pays taxes if they earn 100K, as if they earn 100K, right? So the deduction basically means we're taking that out of our overall tax bill. In 2025, each standard deduction, filers can deduct charitable gifts up to 1,000 or 2,000 for joint filers, and we'll talk more about that in a moment, right? So all really important. Charitable deductions cap at 35%. Starting next year, the tax benefit from charitable deductions is capped at 35%. Now, this is really important for your highest net worth donors. This is true even for donors in the 37% income bracket. So I'm going to pause for 1 second. Sorry. Okay, sorry, coming back for this. Um, Starting next year, the tax benefit for charitable deductions is capped at 35%, right? This is true even for donors in this 37% income tax bracket. It's particularly true for donors in the 37% tax bracket, right? So it means that if you currently are in the 37% tax bracket and you give $1, right now you get 37 cents back. But in the new world, you get 35 cents back, right? So this is a little bit, it's a small portion here, but it's 2 cents on every dollar, which actually really matters. So we'll talk more about that in a moment, but it's going to be this as well. Some of you have said, wow, this is so much information. And it's true, it's a lot. So we will share the slides and the recording after the fact. Don't worry about that. Donors have a unique opportunity now to get a bigger tax benefit than they will next year. So for wealthiest donors, a large gift made this year will result in more after-tax savings than that same gift is made next year, right? So if I'm a major donor, I get more tax benefit this year than I do next year. That is the biggest thing to take away compared to everything else. What this means for end of year, donors who are giving appreciated assets or other things, the window to maximize tax savings is closing. There will still be a lot of benefits next year, but it's not quite as large as they are this year, and that will be really important. Insight 4, small charitable giving deduction for non-itemizers. So this is important, and this is quite helpful for your smaller donors. For the first time since 2021, non-itemizers will get a tax break for charitable giving, up to $1,000 for individuals and up to $2,000 for couples starting in 2026. Note, donations to donor-advised funds or donations to private foundations are not eligible for this. This is only directly to a 501c3 charity. It is considered what we call an above-the-line donation, meaning you can claim it even if you take the standard deduction. This creates a charitable giving incentive for the nearly 90% of taxpayers who do not itemize, right? This is really important. It gives your small donors a straightforward tax benefit, even if they don't itemize. This didn't exist for the last several years. And so this is a really important thing for your small dollar donors. But I want to caution everybody. Some of you are thinking right now, great. For all of my donors who give up to $1,000, this is going to be fine. And a lot of my donors give $300 or $500 or $800, right? You're thinking that right now. That is okay. That is actually incorrect. Now, why is that incorrect, right? Why is it the case that, oh, you can get a $1,000 donation, that means my $700 donors are going to be fine, right? Why would that be wrong? Feel free to answer in the chat. I'll give you half a second to do so. Right? Exactly. So Ken says they might give $700 to 5 different charities. It's the total. So it's tempting to think that you will now get $1,000 donations from your small donors, but the $1,000 cap is to all organizations, and most of your donors will be giving to multiple organizations. So we need to hunt for other giving opportunities to help donors receive tax benefits, right? So it's very important, right? If you are a university and you're getting $600 from someone, it's pretty unlikely that you're the only place they're giving, right? Especially if they're giving $600, $700. They're probably giving to their church or their synagogue or their mosque or their local Boys and Girls Club or their local land trust or their local PTA or whatever it may be. And it's just not gonna be it. And so we really need to think about other ways to find the process here. This is really, really important. So we'll come back to that in a moment. Insight 5, it increases the SALT deduction cap. So starting in 2025, this is the most important other shift that's going to bump more people into itemization. People making less than $500,000 can deduct up to $40,000 in state and local taxes on their federal return, up from just $10,000. This was a big area of debate, and it was really important for a bunch of Republicans in places like New York and New Jersey and California to get on board with the new bill that this had to be changed because this disproportionately hurts folks in higher tax states, or now helps with this change. So it used to be the case, I believe, that the SALT deduction was unlimited, It used to be 10, now it's 40. But again, even wealthier people won't get this deduction. After 2025, the cap will increase by 1% through 2029 and then reset to 10,000 when presumably might be new legislation passed as well. This means more people in high tax states like New York and California and New Jersey may be able to itemize their deductions again. So SALT going back up to $40,000 should drive more itemizing, which is generally good because it means there's more value for major donors in giving. But remember, they have to cross that 0.5% threshold. So it's very complicated here as well. One bonus insight, which I think is not getting enough attention. This is an incredibly important component of the tax bill that no one's really talking about. And so I want to make sure you are all aware of it. Starting in 2025, taxpayers over 65, and as you know, there's a lot of people over 65 now, are eligible for an additional $6,000 through 2028. That is on top of the already existing benefits that single and joint deduction folks get who are above 65 already, right? Already. So there's a lot of preferential treatment for seniors here. It raises the total deductions to $23,750 or $46,700 if for a married couple both over 65. So there's really big deductions here. And what it means is that a lot of folks who are seniors are not going to get a lot of tax benefits over that initial $1,000 they can give. This is incredibly important. We're going to talk about really the one very best way for seniors to give, and then also some other avenues as well. But most of you, just mental check, do you have more than half of your donors over 65, right? So that's an important point. Means fewer seniors, especially in low tax states, will itemize, and seniors will be hunting for other ways to save on taxes besides their normal way of giving. So really, really, really important, right? Again, do you have more than half your donors? Do you have more than a third of your donors? Do you have more than 3/4 of your donors over 65? This is a really important point to dial in on. This is, I've already said this, individuals who are 70 and a half or older can reduce their taxable income by one primary way, right? And it's by making qualified charitable distributions from their IRAs. These are fast rising among older folks, but they're going to go up even faster with the standard deduction because more and more people will look at giving cash normally and say, oh, this gives me no tax benefit, or I've already given away my $1,000 pre-deduction component, and now I'm sort of out of it, and there's no tax benefit going forward. So this is super duper important, right? If you haven't thought a lot about qualified charitable distributions and you have a whole bunch of donors over 70, you have to dial into this way of giving. It's really important. In 2025, donors can make QCDs up to $108,000 from their IRAs to charity. Ooh, what is the limit for 2026? Does anyone know? I think it might be 115, but I don't want to tell anybody the wrong thing. But in 2025, it's 108,000, and it's going up with inflation every year. So if you're 73 or older, Steve says 111, Barbara says 115. Let's get some tie-breaking votes in the chat, please. 115, thanks, Doug. Thanks, Phoebe. Thanks, Melody. Okay, so 115 it is. If you're 73 or older, it will also help satisfy what's called your required minimum distribution, which is the amount of money the government says you got to take this out and you have to pay taxes on this money. So it's a really valuable thing. Now, remember back to that S&P, that slide when we said, oh, if you started investing in 1990, it's gone up like 6, 7, 10 times. Well, now I have all that money. Maybe I don't need the money out of my IRA, but I don't want to take it and pay taxes on it. This is the best way to avoid that, right? It's one of the smartest ways. By the way, we don't have a slide on this, but if someone is over 75 or over 80 or 85 or whatever, or at any age basically, and you pass away and you pass your IRA on to your kids or your spouse or your cousin, they have to pay income taxes on that. There's no way to get out of it. No, even if you're below the estate tax threshold, that's what makes these gifts so, so, so important. Bonus insight, more donors will resort to bunching. So bunching became a go-to strategy after 2017 tax law, double the standard deduction. So a higher deduction means fewer donors deduct smaller annual gifts. And some people are going to be bunching multiple years of giving into 2025, or even better, some people are just going to be giving extra in 2025, and hopefully we'll still give in 2026 and 2027. So get ready for that. All right. That is so much. Some of you felt like that was too much information. Sorry. Go back and read the deck. Go back and watch it again. But it was really important to get through all of that so we can now say, what does this mean for giving and what should we often do about it? Okay. Jess says, do we anticipate they'll bunch into DAFs versus charities? Yes, they'll do both. They'll do both. So let's dive in here. What is happening? First, donors have added incentive to give before this year ends to receive their full tax benefit. And the market is strong, meaning many supporters are sitting on significantly appreciated assets. And many small dollar donors are feeling squeezed, but donors with wealth are still possession to give, right? So these things are all happening. What does it mean for us and what do we do about it? Well, here are 5 strategies to close 2025 and prepare for 2026 that I hope will be useful to your organization. First, fine-tune the now is better messaging. So encourage any donors who itemize to accelerate giving before 2025 to maximize their deductions. Gifts made this year qualify for full deductions rather than only amounts above the new 0.5% floor from AGI. And your high net worth donors may benefit from bunching multiple gifts now to avoid the 35% deduction cap. Your wealthiest supporters are all in 37%, but now they're only going to get 35% worth of deduction next year, right? So now they get 37%, next year they get 35%. Really, really, really important. Karen says, are there any stats on how much tax law actually impacts donations? Yes. So I'm not going to go through all of it now, but believe me that the research shows that tax law significantly impacts donations, even to churches, even to synagogues, even to places of worship, even to museums, even to colleges, everywhere. Now, why is this? It's basic supply and demand, folks. When I give $100 in 2017, it cost me less to give that $100 than it did in 2018. And like anything in supply and demand, I will get more of it when it costs less. Donations effectively became more expensive under the new tax law, and so it goes down, which is why we need to find smart ways around it, because people still do care about your cause. So really, really important. Let's talk about the now is better messaging. So we're going to focus year-end messaging around urgency and timing. Try language like give while tax savings are the highest, or this year's gifts go further to motivate donors to front load their giving. Remember to reinforce that giving tax smart gifts instead of cash can offer a greater tax benefit and maximize the impact of their gift, right? So the new tax law may have donors thinking, and it allows us to talk about new ways to give that they might not have done in the past. Here's an example of why now is better. So we can meet Susan, who lives in California, 74 years old, great car in her driveway in this picture. Her annual income is $2 million. She also has a beautiful dog. She plans to give $1 million to charity, giving in 2025. The full $1 million gift is deductible. Thank you, Susan, so much. We appreciate your gift. Total gift to charity is $1 million. Susan's total tax savings on this would be $370,000. Of course, it might be even higher if she saves on her California taxes as well, but this is just federal tax savings. Giving in 2026, first $10,000 is not deductible. Her charitable deduction is capped at 35%. Total gift to charity is $1 million, and her tax savings is $346,500. Right? So again, pretty big tax savings she'll still give next year, but it's not as much as this year, right? It's not as much as this year, right? Thank you so much. Spotlight strategy 2, spotlight QCDs for older donors. Qualified charitable distributions are more valuable than they've ever been, and they've already been incredibly valuable. They bypass the new AGI and deductions cap. They help reduce seniors' taxable income. Huge benefit. They're one of the most tax smart gifts or ways give for donors aged 70 and a half and older in 2026. If you haven't already started talking about QCDs with your older donors, this is the best time to start. You also want to have a plan for it all of next year. This is super duper important. And it's one of the ways that all of your donors, I think, will be shifting to who are older starting next year. By the way, why does this matter? Well, it turns out there's just a lot of folks turning 70, right? So you can see how big the population was over 65 in 2020, where 5 years later, you can guess how old those folks are now. And you can see the percentage of total population, percentage of total adults is going up pretty dramatically. So these folks over 70 are becoming an increasingly, incredibly important part of overall giving strategy in a way that just wasn't true 10 years ago, right? So if we're not good at raising money from folks over 70, we're probably not good at raising money in 2026 across the board. Atashi says QCDs have jumped up 60% in the last 2 months for us. So those of you that don't know Tashi, she does some of the great work at a food bank in California and is one of the sort of, I think, smartest programs on this type of giving. So thank you for shouting that out, Atashi. Really, really helpful. This is happening all over the country, right? It's happening all over the country. And so make sure that you are in on this trend. There are more donors eligible to make a QCD than ever before. The number of Americans over 65 is expected to rise by 42% by 2050. And doing this in your outreach means two things. We're helping older donors, right? We love our older donors. We want to help them give smart. And we're prepping them for 2026 when QCDs will be the most valuable way they can give for many of them, right? So super important. If you don't have a strategy around QCDs, make sure that you get one here. Include QCD options in your ways to give page and donate page ahead of the most traffic time of year, and add a call out and appeals like, are you 70 and a half or older? You can give directly from your IRA to maximize your impact and minimize your taxes, right? We want these things. We want most impact, lowest cost. That's what we're fundamentally looking for when we think about ways to give. Strategy 3, we asked some questions about DAFs. There's some questions in the chat about donor advised funds. Make these a win-win. So donors can front load several years of giving into one DAF contribution, and a lot of financial advisors will be meeting with their wealthy donors, their wealthy clients right now, telling them to do this strategy, right? So this is going to be a very common meeting. Some of you may have financial advisors. Some of you may have had financial advisors who've already met with you about this strategy. And what they're going to say is, we should move a bunch of money now, maximize that tax benefit, and then give that over the next few years. They can recommend grants this year, next year, et cetera, keeping their annual support steady. So you may see this. What does it mean? It means our donor advised fund strategy is more important than ever as well. Let's talk through an example. So a couple with a $31,500 standard deduction gives $15,000 to National Aquarium each year. Shout out to the National Aquarium. It's pretty impressive. With this gift, they won't meet their standard deduction. By bunching 4 years of gifts since 2025, they contribute $60,000 to their donor advised funds, claim the full deduction, get a big benefit, and then they recommend $15,000 in grants every year, or maybe more if the investments in that donor advised fund go up. Say thanks a bunch, end of year, right? So pair your November and December's thank yous with donor education. So if you have a thank you note that you are sending in November, December, say thanks a bunch for your generosity. Many donors are choosing to bunch gifts this year to make the most of tax benefits before 2026. If you're interested, you can email us, you can fill this out, you can give some more, right? So really big benefit here. You might want to record a 30-second video that says thanks a bunch for major donors. Thanks a bunch for supporting blank. Donors like you are choosing to group several years of giving into one big year. It's called bunching, and it can help your donation feed hungry kids, create a new path for the land trust, educate more folks, whatever it may be. Really important opportunities here. We want to send handwritten thanks a bunch cards to mid-level major donors. Again, we're so grateful, et cetera, et cetera. Maybe you'll consider bunching. These cards are really valuable, and think about what it would mean to get all that extra revenue up front. Strategy 4, a lot of donors gave early in 2025. What happened in 2025? Early 2025, you did not yet know that these tax laws were going to come into effect, right? Let's say there were funding cuts. And so we stepped up and we gave more in March. But March, we didn't know what was going to happen in July yet. And so there's some big opportunities here. This is a stewardship touch point that highlights what their gifts made possible, right? One of my favorite things about thank you notes is turn into an action movie. Thank you for that gift. It was put right to work doing X, Y, and Z. Remind them tax benefits will change in 2026, and this year may be the last chance to maximize savings. So maybe instead of giving next April, they give this December and get that gift straight out. Here's some language, right? I want to thank you again for your generous gift this spring. It came right when several federal grants were frozen. It made a profound difference. Because of your gift, we were able to keep 15 students in their work study positions and fully fund our summer research program, which otherwise would have been paused. As we approach the end of the year, I also want to share that tax rules are changing next year. If you're thinking about another gift, doing it before December 31st would help students and let you make the most of your tax savings, right? It's not just taxes, it's not just helping, it's both, right? So really, really important stuff here. By the way, we're going to send you the slides after the fact so you can copy and paste this and start to work this into your own structures. This end of year and always ask for non-cash gifts. Only cash donations are counted for the deductions. The universal cap for donors taking the standard deduction weakens the incentive to give cash. Once a donor hits that cap, any additional cash gifts give them no tax benefits, right? None after we hit that first $1,000 component. So QCDs, pure tax benefit. Donor advised funds, you may have that bunching strategy. You should be actively promoting these gift types to your supporters. Here's an example. Someone just asked for sample language. So for HCP, right, for the Cure Blindness Project, a footer in their email starts to say, okay, great, here's some tax smart gifts. Just think about this. Again, you can copy and paste this and use it on your own. And what we've seen here, I'm going to wrap up in a moment to make sure we have a little bit of time for questions, is that smart gifts, these sort of QCD gifts, the stock gifts, the donor advised fund gifts, are exploding right now. Some of this is changing donor behavior. Some of this, the market is so good. But just to give you a sense, July, 70%, 77% more dollars raised compared to July of 2024, which was a pretty good year. August, 142% more dollars raised compared to August 2024, which again was a pretty good month in 24. 110% bigger in September than in the previous September. So pretty astonishing stuff here. And you just see this explosion, right? Someone just said in the chat that their QCDs are up 60%, year over year already. I mean, really just, this matters, right? This stuff is happening and it matters and it's affecting organizations like yours if it's not already affecting yours. So we want to really get through this, right? Again, in terms of total number of gifts, we're seeing doubled in September, up 60% plus in July and August. Really, really important. All right. Before we wrap up, I want to share, Karen asked if we are including the commentary. Yes, so you can watch the full recording and have the slides again. You should be fine. Feel free to watch it on half speed if it's useful. Here's something we did yesterday, right? So Marianne says, Dr. James, yay. Some of you know Dr. Russell James. He's wonderful. Dr. James is, in my mind, by far the smartest, certainly the smartest academic in the United States on charitable giving. He works out of Texas Tech. Many of you have met him or known him. Just take it for granted. Lula says Dr. James is the best. Jennifer says Russell James equals the best, et cetera, right? Dr. James is incredible. He is one of the few great researchers who is also a great communicator. And in a dream world, you would have Dr. James sit down with every one of your major donors and explain to them why some of these smarter ways to give are better for them. And in that world, that would convince your major donors to give you different types of gifts, which will give you much larger gifts, right? Moving from $200 in cash or $1,000 in cash or $5,000 in cash to a $50,000 stock gift, right? To a QCD, to a donor advised fund grant that's quite large. So I had the extreme benefit of sitting down with Dr. James yesterday and said, look, there's a lot going on in the world with all these tax changes. I'm going to have a session with everyone tomorrow. I'm going to tell them what to say. But what if you, Dr. James, could just say it for them to their donors, right? Amy says, what if we're just starting and they seem to be hesitant in giving? This is one of the best resources that I think has ever existed in order to give directly to your donors to help change the way they give, right? So it's super important. So here are our smiling faces, as you can tell. And so we recorded a video. I think it's about 6 or 7 minutes. It's not super short. It's not super long. Here's what you might do, right? So you would send an email either to your full list or to just your major donors, but I honestly think you could send it to everybody. Subject, a must-watch conversation. Hi, George. Hi, Sarah. Hi, Mary. I wanted to share a video that you might find helpful. In it, FreeWill co-CEO, that's me, interviews Dr. Russell James, who may be the world's leading expert on charitable giving, about some of the smartest ways to give at year end. It is a quick watch, and it is pretty useful to inform your giving to any of the causes you care about. Here's the video. Best, your name. P.S. If you're ever interested in making one of these smarter gifts to org, just click here. And here might be your ways to give page. It might be if you're a FreeWill partner, your smart giving suite. It might be just email me. But you'll have this resource because one of the things that Dr. James and I were talking about this a bunch before we were filming yesterday. And it's hard for you to go to a donor and say, listen, George is our donor here. You're probably making a mistake here. You're probably giving the wrong way. And it's costing you money and it's decreasing your impact. You can't really do that. Whereas I can talk to Dr. James and say, hey, what mistake are most people making? And he'll say, oh, a lot of people make this mistake. They need to do this instead. And it's a little more forceful. It's obviously kind and loving, but it's a way to really do this. And so Susan asked if it's for all donor levels. I honestly think this is a great idea for anyone who is, anyone who's over 70, certainly, talk about QCDs. Anyone who's giving at any level and is over 50, 60 probably has some appreciated assets. These are people who must want to know about it. I wouldn't remove folks. I think it's really educational. And by the way, you can see some of these sentences, right? A must-watch conversation, just a conversation. We're not asking for anything. We're sharing a video that you might find helpful. It's not for us, it's for you. In it, Patrick and Russell, your donors have never heard of Russell James. That's okay. That's why we're telling them that he may be the world's leading expert on charitable giving, about some of the smartest ways to give. So smart for you right now. Why? Why now? Right now at year end. It's a quick watch. It's not too much effort from you, and it's pretty useful. This is really important to inform your giving to any of the causes you care about, any of them. What it means is I'm not here asking for money. I'm here to make you smarter because I know you're giving to your place of worship. I know you're giving to your university. I know you're giving to local land trust on top of our organization, and we love you for it. And now we're going to make you smarter about this. And then suddenly they start to think about it and they get a little bit of time to meditate on it. And frankly, videos are often more compelling than the written word. Humans did not evolve to read, right? We've only been reading for, most people on the planet have only been literate for like the last 100 years or so, if that. And so you end up in this world where visual stimulation, conversation just hits a lot harder than the written word for many folks. So we're able to do this as well. Karen says, how long is it? 7 minutes. Sorry, I'm talking so long about this video, but it's amazing. Just to give you a sense. We'll send it to you. Oops. Here's what the video looks like, and here's the message to send. So we'll share that with you as well. Okay, next steps. Resources. We are dropping a survey in the chat right now. Thank you, Phoebe. We will send you the video. We will send you the content. We will also send you the recording of the webinar so you can go back and all of this. You can also share with your colleagues. We know this is a lot of information. What we want to do is get through a lot of it, give you the deck so you can always reference it going forward. You're not going to remember all of it today. We wanted to get through it. We wanted to talk about some very specific things. We also think, hey, you're not just a fundraiser. You're a human who loves having joy in their life. So we're giving away one of my very favorite books, 220 People. Lori says she just finished rereading it for the second time, which is a high praise. So come to that, right? So make sure you fill out the survey if you haven't already. Third, we are going to talk about some specific technology that many people are using. So that one of the FreeWill tools called the Smart Giving Suite. We're going to dive in on the Smart Giving Suite on Thursday. If you're interested in getting up and running before end of year in order to do things like take more stock gifts, take more QCDs, take more donor advised funds. You can see a little picture from the FreeWill team here at our recent volunteer day, which was awesome. We did it all around the country. And so if you'd like to, you can join me on Thursday. I will probably be in the same location. We'll still be in Long Island. We had a couple of folks come into the room while we were talking, which is why I had to do a little bit of pauses here. But come hang out with us on Thursday. We'd love to have you here. It is also the case, before we get to the next webinar, that in the survey, if you're interested in learning more about how some of these tools might work directly for your organization, you can actually just schedule. You can sort of say, yes, I want a conversation. It will lead you to a tab that says, great, you want to meet at 3:30 on Wednesday? We'll see you there. And it allows you to schedule directly at a time that works best for you. So give that a shot. I would definitely talk to someone on our team to understand what organizations of your size and type are doing. And I think you'll really enjoy it. So we have a really fun team. Next webinar is not for a little bit. That's not true. It's next Tuesday. Sorry. Then we have a little bit of a break after the 11th. Because on the 18th, I will be in the midst of a 100-mile hike on the Appalachian Trail starting in Georgia, which is very exciting, going all the way to the North Carolina border. And the following week is Thanksgiving, and so we're not going to take your time that week as well. So November 11th, we are with my dear friend, Lisa Barr from NPT, the National Philanthropic Trust. NPT does the absolute best research on donor advised fund that exists. And so we are so glad to have Lisa here. We're going to talk about an overview of DAPS. We're going to talk about some of the most recent data, which should be really interesting. So you're going to have breaking news next week from Lisa. I haven't even seen it yet. I am so excited. I'm also being told that I'm getting my Appalachia pronunciation wrong, so I apologize for that. Okay, so that's happening. And the next steps, if you haven't already, please fill out the survey. Then come join us on Thursday, this Thursday, 48 hours from today, 47 hours from right now, to talk about the Smart Giving Suite, or schedule a direct conversation to just figure out for yourself, group session, direct conversation, whatever works more for you. Then come see us next Tuesday with Lisa at NPT to understand some breaking news about donor advised funds that I haven't even seen yet, but I'm so excited to research before that. And lastly, if you need anything at all, shoot me a note, Patrick at FreeWill, connect with me on LinkedIn. I'm pretty easy to find. And with that, I think we'll pause 10 minutes early, give everyone a little bit of time to digest all the things they just learned, to get a little bit of time back. And that's it. Thank you so much. Thanks for being here. Thanks for taking the time. I know this is a lot of information. I know we're talking really fast. Sorry. That's why we're sending the recordings around. That's why we're sending the slides around. We just have a lot of great research to share. Big shout out to my colleague Phoebe, who put a ton of work into this, even more so than usual. Also, shout out to our design team who redesigned all of this. If you hate the new design, let me know. If you love the new design, let us know. And we will see you in 2 days. Where are we Thursday? Thursday. Fill out the survey, sign up for the Smart Giving session, and we will see you online on Thursday at noon Eastern. So really appreciate everything you all do. Thanks for all the great work you're doing. Please say hello to all your coworkers and team for us. We're very grateful for everything.